Welcome back to Drowsy Tales Daily. Tonight, I have 35 incredible stories from Reddit about small business betrayals that destroyed dreams, ruined friendships, and devastated families who trusted the wrong people with their livelihoods and life savings. Our first story comes from a small business owner who discovered their trusted business partner had been systematically stealing company funds for personal luxury purchases while claiming the business was struggling financially. The business partner had exclusive access to certain bank accounts and had been gradually transferring money to personal accounts while creating false documentation about business expenses and operational costs that supposedly justified the missing funds. The fund theft scheme involved sophisticated accounting manipulation and false expense reporting that would make unauthorized withdrawals appear to be legitimate business expenses while actually funding the partner's expensive lifestyle and personal debt payments. The partner had been particularly careful to time their theft activities to coincide with busy business periods when financial monitoring would be less detailed and when missing funds might be attributed to normal operational expenses rather than deliberate embezzlement. The scheme extended to creating fake vendor relationships and service contracts that would provide cover for unauthorized fund transfers while maintaining the appearance of legitimate business operations and expense management. The partner had also been manipulating financial reports and cash flow projections to convince other stakeholders that the business was experiencing normal financial challenges rather than systematic theft that was draining operational capital. The business fund theft was discovered when the owner decided to conduct a comprehensive financial audit and found discrepancies between reported expenses and actual business operations, leading to investigation that revealed systematic embezzlement that had been threatening the business's survival while funding the partner's personal extravagance. Our second story involves a small business employee who systematically copied the company's entire customer database and proprietary client information to start a directly competing business while still employed and using company resources. The employee had been working in customer service and sales roles that provided access to detailed client information, purchasing history, and relationship management data that represented years of business development and customer acquisition investment. The customer database theft scheme involved sophisticated data extraction and client information compilation that would provide comprehensive competitive intelligence for starting a directly competing business with existing client relationships and market knowledge. The employee had been particularly focused on copying information about the most profitable clients and highest value customer relationships, essentially stealing the most valuable business assets while maintaining employment and access to ongoing customer development and relationship building. The scheme extended to copying proprietary pricing strategies, service delivery methods, and even marketing approaches that would allow the competing business to replicate successful business strategies without independent development or market research investment. The employee had also been subtly undermining client relationships and planting doubts about service quality to prepare customers for transition to the competing business that was being developed using stolen company information. The customer database theft was discovered when the original business began losing major clients to a new competitor that demonstrated detailed knowledge of proprietary information and client relationships that could only have been obtained through insider access to confidential business data. Our third story comes from a family restaurant owner who discovered their sibling had been systematically embezzling from the family business while claiming financial difficulties were due to market conditions and increased operational costs. The sibling had been given financial management responsibilities for the restaurant and had been gradually stealing money from daily receipts and vendor payments while creating false documentation about expenses and operational costs that supposedly justified reduced profitability and cash flow problems. The family business embezzlement involved sophisticated manipulation of daily financial operations and cash management systems that would make theft difficult to detect without detailed financial analysis and comprehensive auditing of daily operations and expense reporting. The sibling had been particularly careful to steal amounts that wouldn't immediately trigger suspicion while consistently claiming that reduced profits were due to increased food costs, utility expenses, and market competition rather than systematic theft of business revenue. The scheme extended to manipulating vendor relationships and creating fake service expenses that would provide cover for stolen funds while maintaining the appearance of legitimate business operations and normal expense management for family restaurant operations. The sibling had also been using their family relationship and trusted position to deflect questions about financial performance and to discourage other family members from conducting detailed financial analysis or seeking independent accounting verification. The family restaurant embezzlement was discovered when other family members decided to hire an independent accountant to analyze business performance and discovered systematic theft that had been undermining the restaurant's profitability and threatening the family's livelihood and business legacy. Our fourth story involves a business partner who was secretly selling company trade secrets and proprietary business information to direct competitors while participating in strategic planning and competitive positioning discussions. The partner had access to confidential business strategies, product development plans, and competitive intelligence that represented significant investment in research and business development that provided competitive advantages in their industry sector. The trade secret selling scheme involved systematic documentation and communication of confidential business information to competitors who were willing to pay premium prices for insider intelligence about strategic planning and competitive positioning strategies. The partner had been particularly focused on selling information about upcoming product launches, pricing strategies, and market development plans that would allow competitors to develop counter strategies and competitive responses that would undermine the original company's market advantages. The scheme extended to providing competitors with advance notice of business development initiatives and strategic partnerships that would allow competing companies to interfere with business relationships and strategic positioning efforts. The partner had also been manipulating internal strategic discussions and planning processes to gather maximum intelligence for sale to competitors while participating in meetings and planning sessions that were intended to develop competitive advantages. The trade secret selling operation was discovered when competitors began making strategic decisions that could only have been based on access to confidential internal planning information, leading to investigation that revealed systematic information theft and sale that was undermining the company's competitive position and market development efforts. Our fifth story comes from a business owner who discovered their trusted manager had been manipulating inventory systems and product tracking to steal merchandise for personal resale while creating false documentation about inventory shrinkage and product loss. The manager had administrative access to inventory management systems and had been systematically removing valuable merchandise while creating false reports about damaged goods, theft losses, and inventory discrepancies that would explain missing products without triggering detailed investigation. The inventory manipulation scheme involved sophisticated understanding of inventory tracking and product management systems that would allow systematic theft while maintaining overall inventory balances and avoiding detection through routine inventory monitoring and management reporting. The manager had been particularly focused on stealing high-value merchandise and products with strong resale markets, essentially operating a parallel retail business using stolen inventory while maintaining employment and access to ongoing product theft opportunities. The scheme extended to manipulating vendor relationships and delivery schedules to create opportunities for inventory theft while maintaining normal business operations and avoiding supplier relationship problems that might expose inventory discrepancies. The manager had also been creating fake damage reports and loss documentation that would justify inventory adjustments while concealing systematic theft that was reducing business profitability and operational efficiency. The inventory manipulation was discovered when the business owner noticed patterns of inventory shrinkage that were inconsistent with normal business operations and industry standards, leading to comprehensive inventory auditing that revealed systematic theft disguised as normal business losses and operational inefficiencies. Our sixth story involves a business co-founder who systematically stole intellectual property and trade secrets to start an identical competing business while maintaining partnership responsibilities and access to ongoing business development and strategic planning. The co-founder had been involved in product development and business strategy creation, giving them access to proprietary information and intellectual property that represented significant investment in research and development that provided the foundation for the business's competitive advantages. The intellectual property theft scheme involved comprehensive documentation and replication of proprietary business processes, product designs, and strategic methodologies that would allow creation of a directly competing business without independent development investment or market research expenses. The co-founder had been particularly focused on stealing the most valuable intellectual property and business processes that would provide maximum competitive advantage while maintaining partnership relationships and access to ongoing business development and strategic planning activities. The scheme extended to recruiting other employees and business relationships to support the competing business that was being developed using stolen intellectual property and trade secrets while maintaining the appearance of partnership loyalty and commitment. The co-founder had also been manipulating business development activities and strategic planning to delay competitive initiatives while accelerating development of the competing business that was based on stolen intellectual property. The intellectual property theft was discovered when the competing business launched with products and services that were virtually identical to proprietary offerings that had been developed through years of research and development investment, leading to legal investigation that revealed systematic theft of intellectual property and trade secrets. Our seventh story comes from a business owner who discovered their employee had been creating fake vendor accounts and service contracts to generate kickback payments and fraudulent reimbursements while maintaining normal purchasing and vendor management responsibilities. The employee had purchasing authority and vendor relationship management responsibilities that provided opportunities to create false vendor accounts and service contracts that would generate payments to accounts they controlled while appearing to provide legitimate business services and supplies. The fake vendor kickback scheme involved sophisticated creation of false business documentation and service contracts that would pass casual inspection while actually providing no legitimate business value or service delivery to justify the payments being made to fraudulent vendor accounts. The employee had been particularly careful to create fake vendors that provided services and supplies that were difficult to verify or quantify, including consulting services and specialty supplies that would justify payments without obvious service delivery or product provision that could be easily audited. The scheme extended to manipulating vendor payment schedules and approval processes to ensure that fraudulent vendor payments would be processed without detailed verification or competitive bidding that might expose the fake nature of the vendor relationships and service contracts. The employee had also been creating false service delivery documentation and vendor performance reports that would support ongoing payments to fake vendors while maintaining the appearance of legitimate vendor management and purchasing efficiency. The fake vendor operation was discovered when the business owner decided to audit vendor relationships and discovered that several vendors receiving regular payments had no verifiable business operations or service delivery records that would justify the substantial payments they had been receiving. Our eighth story involves a business partner who was systematically hiding profitable contracts and business opportunities from other partners while claiming the business was struggling to find new revenue sources and growth opportunities. The partner had primary responsibility for business development and client relationship management, giving them access to potential contracts and business opportunities that could significantly impact company profitability and growth prospects. The contract hiding scheme involved sophisticated manipulation of business development reporting and opportunity tracking that would conceal profitable opportunities while creating false impressions about market conditions and business development challenges facing the company. The partner had been particularly focused on hiding the most profitable opportunities and contracts that would generate substantial revenue while claiming that market competition and economic conditions were limiting business development success and growth potential. The scheme extended to manipulating client communications and proposal processes to ensure that hidden contracts would be completed without other partners learning about the profitable opportunities that were being concealed from partnership, profit sharing, and business development planning. The partner had also been creating false business development reports and market analysis that would support claims about limited opportunities while actually securing profitable contracts that were being hidden from partnership financial management and profit distribution. The contract hiding operation was discovered when other partners accidentally learned about major contracts that had been completed without their knowledge, leading to investigation of business development activities that revealed systematic concealment of profitable opportunities and revenue sources that should have been shared among all business partners. Our ninth story comes from a business owner who discovered their manager had been secretly recruiting employees to start a competing business while using company resources and time to develop the competing venture during normal business hours. The manager had been leveraging their leadership position and employee relationships to recruit talent for a competing business that was being developed using insider knowledge of company operations and strategic planning while maintaining employment and access to company resources. The employee recruitment scheme involved sophisticated manipulation of employee relationships and workplace dynamics that would encourage key employees to join the competing venture while avoiding detection through normal management activities and employee relationship building that was part of their legitimate job responsibilities. The manager had been particularly focused on recruiting the most talented and valuable employees while gathering intelligence about company operations and strategic planning that would provide competitive advantages for the new business that was being developed with stolen human resources. The scheme extended to using company facilities and resources for recruiting activities and business development for the competing venture while maintaining normal management responsibilities and avoiding suspicion about their loyalty and commitment to the original business. The manager had also been manipulating employee scheduling and work assignments to create opportunities for recruiting activities and competitive business development while appearing to fulfill normal management responsibilities and employee development duties. The employee recruitment operation was discovered when multiple valuable employees submitted resignations simultaneously to join the same competing business, leading to investigation that revealed systematic recruitment and business development activities that had been conducted using company resources and management authority. Our 10th story involves a business accountant who was systematically manipulating financial books and records to hide embezzlement while creating false financial reports that concealed the theft and made business performance appear normal. The accountant had exclusive access to financial record keeping and reporting systems, providing opportunities to manipulate accounting entries and financial documentation while maintaining the appearance of normal business operations and financial performance for stakeholder reporting. The book manipulation scheme involved sophisticated accounting fraud and financial record falsification that would conceal systematic embezzlement while providing false financial information to business owners and stakeholders who relied on accurate financial reporting for business decision-making and performance evaluation. The accountant had been particularly careful to manipulate financial records in ways that would balance overall financial reporting while concealing specific theft activities and unauthorized fund transfers that were being used for personal expenses and debt payments. The scheme extended to creating false vendor payments and expense documentation that would provide justification for missing funds while maintaining overall financial balance and avoiding obvious discrepancies that might trigger detailed auditing or financial investigation. The accountant had also been manipulating financial reporting timing and documentation to ensure that embezzlement would remain hidden during routine financial reviews and stakeholder reporting that was used for business planning and performance evaluation. The book manipulation was discovered when business owners noticed inconsistencies between reported financial performance and actual business operations, leading to independent accounting analysis that revealed systematic financial fraud and embezzlement that had been concealed through comprehensive accounting manipulation and false financial reporting. Our 11th story comes from a business owner who discovered their partner had been forging signatures on loan documents and financial agreements to secure unauthorized financing while using business assets as collateral without consent from other business stakeholders. The partner had been experiencing personal financial difficulties and had decided to use business creditworthiness and assets to secure personal loans while creating false documentation that would make unauthorized borrowing appear to have proper business authorization and stakeholder approval. The signature forgery scheme involved sophisticated document manipulation and financial fraud that would provide access to substantial credit and financing while avoiding detection through normal business financial management and partnership oversight that should have been required for major financial commitments. The partner had been particularly focused on securing loans that could be used for personal debt resolution and expense management while using business assets and creditworthiness as collateral for personal financial obligations that had no legitimate business purpose or benefit. The scheme extended to manipulating business financial records and credit reporting to support unauthorized loan applications while concealing the personal nature of the debt and financial commitments that were being secured using business resources and creditworthiness. The partner had also been intercepting loan correspondence and financial communications to prevent other business stakeholders from learning about unauthorized borrowing that was creating financial obligations and credit risks for the business without legitimate business purpose or stakeholder approval. The signature forgery operation was discovered when loan default notices began arriving for debts that legitimate business stakeholders knew nothing about. leading to investigation of loan documentation that revealed systematic forgery and unauthorized borrowing that had created substantial financial liability for the business. Our 12th story involves an employee who systematically stole client relationships and business contacts to start a personal service business while maintaining employment and using company resources to develop competing client relationships. The employee had been working in client relationship management and business development roles that provided access to detailed client information and relationship building opportunities that represented significant business investment in customer acquisition and relationship development. The client relationship theft scheme involved sophisticated manipulation of client communications and relationship building activities that would transfer client loyalty and business relationships to the employee's personal business while appearing to fulfill normal job responsibilities and client service duties. The employee had been particularly focused on stealing the most profitable client relationships and highest value business contacts while maintaining employment access to ongoing client development and relationship building opportunities that could be exploited for personal business advantage. The scheme extended to using company resources and facilities for personal business development while maintaining normal employment responsibilities and avoiding suspicion about dual business activities and competing interests that violated employment agreements and professional responsibilities. The employee had also been manipulating client communications and service delivery to encourage clients to transfer their business to the personal service company while appearing to provide normal customer service and relationship management for the original employer. The client relationship theft was discovered when multiple major clients began transferring their business to the same competing service provider, leading to investigation that revealed systematic client relationship manipulation and theft that had been conducted while maintaining employment and using company resources for competitive business development. Our 13th story comes from a business owner who discovered their co-owner had been selling company assets and equipment without authorization while claiming that asset sales were necessary for operational expenses and cash flow management. The co-owner had been given responsibility for asset management and operational oversight, providing opportunities to sell valuable company property while creating false justifications for asset disposal and equipment sales that were actually being used for personal financial benefit. The unauthorized asset sale scheme involved systematic disposal of valuable business property and equipment while creating false documentation about operational needs and financial requirements that supposedly justified asset sales and equipment disposal for business operational purposes. The co-owner had been particularly focused on selling the most valuable assets and equipment while maintaining enough operational capability to avoid immediate detection of asset theft and unauthorized property disposal that was reducing business operational capacity and asset value. The scheme extended to manipulating asset records and inventory management to conceal unauthorized sales while providing false explanations for missing equipment and reduced operational capacity that was actually caused by systematic asset theft for personal financial benefit. The co-owner had also been intercepting asset sale proceeds and equipment disposal payments while claiming that funds were being used for operational expenses and business debt payments that were actually fictitious or inflated to justify personal use of asset sale proceeds. The unauthorized asset sale operation was discovered when the business owner attempted to locate specific equipment for operational needs and discovered that valuable assets had been sold without authorization, leading to investigation of asset records that revealed systematic unauthorized disposal of business property for personal financial gain. Our 14th story involves a manager who was creating elaborate fake expense reports and reimbursement claims to steal money from business expense accounts while maintaining normal management responsibilities and operational oversight duties. The manager had authority to approve certain expense categories and had access to expense reporting systems that could be manipulated to generate fraudulent reimbursement payments for personal expenses that were being disguised as legitimate business costs. The fake expense report scheme involved sophisticated creation of false documentation and receipt manipulation that would support fraudulent expense claims while avoiding detection through normal expense monitoring and reimbursement approval processes that were designed to prevent expense fraud and unauthorized spending. The manager had been particularly careful to create expense claims that would appear reasonable and consistent with normal business operations while actually representing personal expenses and lifestyle costs that had no legitimate business purpose or operational justification. The scheme extended to manipulating expense approval processes and documentation requirements to ensure that fraudulent expense claims would be processed without detailed verification or competitive analysis that might expose the personal nature of expenses being claimed for business reimbursement. The manager had also been creating false business justifications and operational explanations for expensive purchases and services that were actually personal expenses being disguised as business costs through fraudulent expense reporting and reimbursement manipulation. The fake expense report operation was discovered when business owners noticed patterns of expensive claims that seemed inconsistent with actual business operations, leading to detailed expense analysis that revealed systematic fraud and personal expense reimbursement disguised as legitimate business costs. Our 15th story comes from a business owner who discovered their partner had been manipulating profit-sharing calculations and financial distribution formulas to increase their share of business profits while reducing distributions to other stakeholders. The partner had been given responsibility for financial analysis and profit distribution calculations, providing opportunities to manipulate financial formulas and distribution percentages while maintaining the appearance of legitimate financial management and partnership profit sharing. The profit-sharing manipulation scheme involved sophisticated alteration of financial calculations and distribution formulas that would increase personal profit shares while creating false justifications for reduced distributions to other business stakeholders who were entitled to equal profit sharing and financial returns. The partner had been particularly focused on manipulating calculations during high-profit periods when distribution manipulation would generate maximum personal financial benefit while creating minimal suspicion about profit sharing, accuracy, and financial distribution integrity. The scheme extended to creating false financial reports and distribution documentation that would support manipulated profit calculations while concealing the systematic theft of profit shares that belonged to other business stakeholders according to partnership agreements and profit-sharing arrangements. The partner had also been timing financial reporting and distribution calculations to coincide with periods when other stakeholders would be less likely to conduct detailed financial analysis or question profit-sharing calculations and distribution amounts. The profit-sharing manipulation was discovered when other stakeholders decided to conduct independent financial analysis and discovered discrepancies between reported profit calculations and actual business financial performance, leading to investigation that revealed systematic manipulation of profit distribution designed to steal partnership profits through fraudulent financial calculations. Our 16th story involves an employee who systematically sold proprietary manufacturing processes and production techniques to competing companies while maintaining employment and access to ongoing process development and manufacturing innovation. The employee had been working in production management and process development roles that provided access to proprietary manufacturing techniques and production methods that represented significant investment in research and development and provided competitive advantages in manufacturing efficiency and product quality. The manufacturing process sales scheme involved comprehensive documentation and communication of proprietary production techniques to competitors who were willing to pay substantial amounts for insider knowledge about manufacturing processes and production methods that would provide competitive advantages without independent research and development investment. The employee had been particularly focused on selling the most valuable and innovative manufacturing processes that provided maximum competitive advantage while maintaining employment access to ongoing process development and manufacturing innovation that could be continuously exploited for personal financial gain. The scheme extended to recruiting other employees who had access to different aspects of manufacturing operations, creating a network of industrial espionage that could provide comprehensive intelligence about proprietary manufacturing processes and production techniques to competing companies. The employee had also been manipulating manufacturing documentation and process records to gather maximum intelligence for sale while avoiding detection through normal employment responsibilities and manufacturing oversight duties. The manufacturing process sale operation was discovered when competitors began implementing production techniques that were virtually identical to proprietary processes that had been developed through years of research and investment. leading to investigation that revealed systematic theft and sale of manufacturing intelligence and proprietary production processes. Our 17th story comes from a business owner who discovered their trusted advisor had been systematically steering the business toward bankruptcy to facilitate acquisition by a competing company that was secretly paying the advisor for business, destruction, and acquisition assistance. The advisor had been given comprehensive access to business strategy and financial planning, providing opportunities to manipulate business decisions and strategic direction while maintaining the appearance of legitimate business consulting and advisory services. The bankruptcy steering scheme involved sophisticated business sabotage and strategic manipulation that would create financial difficulties and operational problems while appearing to provide legitimate business advice and strategic guidance for business development and competitive positioning. The advisor had been particularly focused on creating business problems that would justify acquisition discussions while positioning the competing company as a potential solution for financial difficulties that were actually being artificially created through systematic business sabotage and strategic manipulation. The scheme extended to manipulating financial planning and business strategy to ensure that business problems would escalate to crisis levels that would force consideration of acquisition offers from the competing company that was secretly coordinating the business destruction and acquisition effort. The advisor had also been providing confidential business information and strategic intelligence to the competing company while maintaining the appearance of independent business consulting and strategic advisory services that were actually designed to facilitate business acquisition through systematic sabotage. The bankruptcy steering operation was discovered when the business owner noticed that advisor recommendations consistently led to financial problems while acquisition offers from specific competing companies seemed unusually well-informed about internal business challenges and strategic vulnerabilities that should have been confidential information. Our 18th story involves a manager who was systematically stealing company credit cards and payment methods for personal expenses while creating false documentation about business purposes and operational necessities that supposedly justified unauthorized spending and personal purchases. The manager had access to company credit accounts and payment systems as part of normal operational responsibilities, providing opportunities to make personal purchases while creating false business justifications and expense documentation that would conceal personal spending through company payment methods. The credit card theft scheme involved sophisticated expense documentation and purchase justification that would make personal spending appear to be legitimate business expenses while avoiding detection through normal expense monitoring and credit account oversight that was designed to prevent unauthorized spending and personal use of business payment methods. The manager had been particularly careful to make personal purchases that could be disguised as business expenses while creating false operational justifications and business purposes that would support unauthorized spending without triggering detailed expense verification or purchasing analysis. The scheme extended to manipulating expense approval processes and payment authorization to ensure that personal purchases would be processed without detailed verification or business purpose confirmation that might expose the personal nature of spending being charged to business credit accounts. The manager had also been intercepting credit card statements and payment documentation to prevent business owners from discovering unauthorized spending while maintaining access to company payment methods for ongoing personal expense management and unauthorized purchasing. The credit card theft operation was discovered when business owners noticed unusual spending patterns and expense categories that seemed inconsistent with normal business operations, leading to detailed credit account analysis that revealed systematic personal spending disguised as business expenses through fraudulent documentation and expense manipulation. Our 19th story comes from a business owner who discovered their partner had been systematically diluting ownership percentages through unauthorized stock issues and equity distributions while claiming that ownership changes were necessary for business development and growth financing. The partner had been given authority over certain business legal matters and equity management, providing opportunities to manipulate ownership structures while maintaining the appearance of legitimate business development and growth strategy implementation. The ownership dilution scheme involved sophisticated legal manipulation and equity structure changes that would reduce other stakeholders' ownership percentages while increasing personal control and profit sharing through unauthorized stock issues and ownership redistribution that violated partnership agreements and equity arrangements. The partner had been particularly focused on timing ownership manipulations to coincide with business growth periods when equity changes might appear to be justified by business development needs and growth financing requirements rather than systematic ownership theft and control manipulation. The scheme extended to creating false legal documentation and business development justifications that would support unauthorized ownership changes, while concealing the systematic dilution of legitimate stakeholder ownership rights and profit-sharing entitlements. The partner had also been manipulating business legal records and equity documentation to ensure that ownership theft would be difficult to detect without comprehensive legal analysis and business structure verification that most stakeholders wouldn't normally conduct. The ownership dilution operation was discovered when stakeholders noticed that their profit distributions had decreased despite business growth, leading to legal investigation that revealed systematic ownership manipulation and unauthorized equity redistribution designed to steal business control and profit sharing through fraudulent legal documentation. Our 20th story involves an employee who systematically copied proprietary pricing strategies and competitive positioning information to provide competitors with detailed intelligence about business pricing and market positioning that provided significant competitive advantages. The employee had been working in sales and marketing roles that provided access to proprietary pricing models and competitive analysis that represented substantial investment in market research and strategic positioning that provided competitive advantages in pricing and market development. The pricing strategy theft scheme involved comprehensive documentation and communication of proprietary pricing information and competitive intelligence to competitors who were willing to pay for insider knowledge about pricing strategies and market positioning that would allow them to undercut pricing and gain market share through stolen competitive intelligence. The employee had been particularly focused on stealing the most valuable pricing information and competitive analysis that would provide maximum advantage to competitors while maintaining employment access to ongoing pricing development and competitive analysis that could be continuously exploited for personal financial gain. The scheme extended to manipulating pricing documentation and competitive analysis to gather maximum intelligence while avoiding detection through normal employment responsibilities and sales support duties that provided legitimate access to pricing, information, and competitive analysis. The employee had also been timing intelligence theft to coincide with major pricing decisions and competitive positioning initiatives that would provide maximum value to competitors who were paying for advance notice of pricing changes and competitive strategy modifications. The pricing strategy theft operation was discovered when competitors began implementing pricing strategies that were remarkably similar to proprietary pricing models and competitive positioning that had been developed through extensive market research and strategic analysis, leading to investigation that revealed systematic theft of competitive intelligence and pricing information. Our 21st story comes from a business owner who discovered their co-founder had stolen the entire business plan and operational strategy to start an identical competing business while maintaining partnership responsibilities and access to ongoing business development and strategic planning activities. The co-founder had been instrumental in business plan development and strategic planning, providing access to comprehensive business strategies and operational plans that represented months of collaborative development and strategic thinking that formed the foundation for business operations and competitive positioning. The business plan theft scheme involved systematic documentation and replication of comprehensive business strategies and operational plans that would allow creation of a directly competing business without independent strategic development or market research investment that had been required for original business plan creation. The co-founder had been particularly focused on stealing the most innovative and successful business strategies while maintaining partnership access to ongoing strategic development and business planning that could be exploited for competitive advantage in the identical competing business that was being developed using stolen intellectual property. The scheme extended to recruiting investors and business partners for the competing venture while using stolen business plans and strategic information to demonstrate business viability and competitive advantages that had actually been developed through collaborative partnership efforts. The co-founder had also been manipulating original business development activities to delay competitive initiatives while accelerating development of the competing business that was based on stolen business plans and strategic intelligence. The business plan theft was discovered when the competing business launched with strategies and operational plans that were virtually identical to proprietary business development that had been created through extensive collaborative planning and strategic development investment, leading to legal investigation that revealed comprehensive theft of business planning and strategic intelligence. Our 20-second story involves a manager who was systematically manipulating payroll systems and wage calculations to steal money from employee compensation while creating false documentation about payroll expenses and labor costs that concealed systematic wage theft and unauthorized payroll manipulation. The manager had administrative access to payroll systems and wage calculation processes, providing opportunities to manipulate employee compensation while maintaining the appearance of normal payroll management and labor cost oversight that was part of legitimate management responsibilities. The payroll manipulation scheme involved sophisticated alteration of wage calculations and compensation formulas that would redirect employee wages to personal accounts while creating false payroll documentation that would conceal wage theft through normal payroll processing and employee compensation management. The manager had been particularly focused on manipulating overtime calculations and bonus payments that would be less likely to be immediately noticed by employees, while generating substantial unauthorized income through systematic payroll fraud and wage manipulation. The scheme extended to creating fake payroll expenses and labor cost documentation that would justify missing funds while maintaining overall payroll balance and avoiding obvious discrepancies that might trigger detailed payroll auditing or employee compensation verification. The manager had also been intercepting employee pay stubs and compensation communications to prevent discovery of wage manipulation while maintaining access to payroll systems for ongoing compensation theft and unauthorized wage redirection. The payroll manipulation was discovered when employees began comparing their actual compensation with expected wages and discovered systematic underpayment that was being concealed through false payroll documentation and wage calculation manipulation designed to steal employee compensation through fraudulent payroll management. Our 23rd story comes from a business owner who discovered their partner had been selling customer contracts and service agreements to competing companies while maintaining normal business operations and client relationship management responsibilities. The partner had primary responsibility for contract management and client relationship oversight, providing access to valuable customer contracts and service agreements that represented substantial business value and competitive advantages in client retention and service delivery. The customer contract sales scheme involved systematic identification and communication of valuable customer relationships and service agreements to competitors who were willing to pay premium prices for access to established client contracts and service relationships that would provide immediate revenue and competitive market positioning. The partner had been particularly focused on selling the most profitable customer contracts and highest value service agreements while maintaining enough client relationships to avoid immediate detection of systematic customer relationship theft and contract manipulation. The scheme extended to manipulating contract renewal processes and client communications to facilitate customer transitions to competing companies while maintaining the appearance of normal client relationship management and contract oversight responsibilities. The partner had also been providing competitors with detailed client information and service delivery intelligence that would allow seamless customer transitions and contract acquisitions that would maximize value for both the partner and competing companies purchasing customer relationships. The customer contract sale operation was discovered when multiple major clients began transferring their business to the same competing company with detailed knowledge of service agreements and contract terms that could only have been obtained through insider access to confidential business relationships and contract information. Our 24th story involves an employee who was systematically stealing company equipment and tools to support a personal side business while maintaining normal employment and using company resources for competitive business development. The employee had access to valuable equipment and specialized tools as part of normal job responsibilities, providing opportunities to remove company property for personal business use, while creating false documentation about equipment maintenance and tool replacement that would explain missing company assets. The equipment theft scheme involved systematic removal of valuable tools and equipment while creating false maintenance records and replacement justifications that would conceal ongoing theft while maintaining enough equipment availability to avoid immediate detection of missing company property and asset reduction. The employee had been particularly focused on stealing equipment that would be essential for the competing side business, while maintaining normal job performance and avoiding suspicion about equipment availability and company asset management that might trigger detailed inventory auditing. The scheme extended to using company facilities and resources for side business development while maintaining normal employment responsibilities and avoiding detection through legitimate job duties that provided cover for competitive business activities and equipment usage. The employee had also been manipulating equipment maintenance schedules and asset tracking to create opportunities for equipment theft, while providing false explanations for reduced equipment availability and tool replacement needs. The equipment theft operation was discovered when the company attempted to locate specific tools for major projects and discovered that valuable equipment was missing, leading to inventory analysis that revealed systematic theft of company assets for personal side business development and competitive advantage. Our 25th story comes from a business owner who discovered their trusted consultant had stolen their entire business model and operational framework to start a consulting business that sold identical services to competing companies in the same industry. The consultant had been hired to provide strategic guidance and operational optimization, giving them comprehensive access to business processes and operational strategies that represented years of development and refinement that provided competitive advantages and operational efficiency. The business model theft scheme involved systematic documentation and replication of proprietary business processes and operational frameworks that would allow creation of a consulting business that could sell identical services to competitors without independent development of business strategies and operational methodologies. The consultant had been particularly focused on stealing the most innovative and successful business processes while maintaining consulting relationships that provided ongoing access to business development and operational refinement that could be exploited for consulting business expansion and competitive service delivery. The scheme extended to recruiting other consultants and business advisors who would help market stolen business models to competing companies while avoiding direct competition with the original business that had developed the proprietary operational frameworks and business processes. The consultant had also been using ongoing consulting access to refine and improve stolen business models while claiming to provide strategic guidance and operational optimization that was actually being used to enhance competing consulting services. The business model theft was discovered when competing companies began implementing operational strategies that were virtually identical to proprietary business processes that had been developed through years of operational refinement and strategic development investment, leading to investigation that revealed systematic theft of business models and operational intelligence. Our 26th story involves a manager who was creating false financial reports and performance documentation to hide business losses and operational failures while maintaining management authority and strategic decision-making responsibilities. The manager had been experiencing performance problems and operational failures that threatened their employment and management position, deciding to conceal poor performance through systematic financial fraud and false reporting rather than addressing legitimate business problems and performance issues. The false reporting scheme involved sophisticated manipulation of financial data and performance metrics that would create false impressions of business success while concealing operational failures and financial losses that were actually threatening business viability and competitive positioning. The manager had been particularly focused on hiding the most serious performance problems and financial losses, while creating false success stories and performance improvements that would justify continued employment and management authority despite actual poor performance and operational failures. The scheme extended to manipulating vendor relationships and operational reporting to support false financial claims, while concealing actual business problems and performance issues that required immediate attention and corrective action. The manager had also been intercepting communications and financial correspondence that might expose poor performance while maintaining access to financial reporting and performance documentation systems for ongoing fraud and false reporting activities. The false financial reporting was discovered when business owners noticed inconsistencies between reported performance and actual business operations, leading to independent financial analysis that revealed systematic fraud and false reporting designed to conceal poor management performance and operational failures. Our 27th story comes from a business owner who discovered their partner had been stealing company vehicles for personal use while claiming that vehicle usage was necessary for business development and client relationship management activities. The partner had access to company vehicles as part of normal business operations and client service responsibilities, providing opportunities to use business transportation for personal activities while creating false business justifications and operational explanations that would conceal personal vehicle usage. The company vehicle theft scheme involved systematic personal use of business transportation while creating false trip reports and business activity documentation that would justify vehicle usage for activities that were actually personal rather than business-related transportation needs. The partner had been particularly focused on using company vehicles for personal travel and family activities while maintaining enough legitimate business usage to avoid immediate detection of unauthorized vehicle access and personal transportation theft. The scheme extended to manipulating vehicle maintenance records and usage tracking to conceal personal vehicle usage while creating false business justifications for increased mileage and vehicle wear that was actually caused by personal rather than business transportation activities. The partner had also been using company fuel accounts and vehicle maintenance services for personal transportation needs while claiming that increased vehicle expenses were due to expanded business development and client service activities rather than personal vehicle usage and transportation theft. The company vehicle theft was discovered when business owners noticed unusual vehicle usage patterns and maintenance costs that seemed inconsistent with reported business activities, leading to investigation of vehicle tracking and usage records that revealed systematic personal use of company transportation for activities unrelated to legitimate business operations. Our 28th story involves an employee who was systematically manipulating commission calculations and sales compensation formulas to increase personal earnings while reducing compensation for other sales team members through fraudulent performance reporting and sales attribution manipulation. The employee had access to sales tracking systems and commission calculation processes as part of sales management responsibilities, providing opportunities to manipulate sales attribution and performance metrics while maintaining the appearance of legitimate sales management and compensation oversight. The commission manipulation scheme involved sophisticated alteration of sales attribution and performance calculations that would increase personal commission earnings while creating false justifications for reduced compensation for other sales team members who were actually achieving higher performance levels. The employee had been particularly focused on manipulating high-value sales and commission opportunities that would generate maximum personal financial benefit while maintaining enough legitimate sales performance to avoid immediate detection of commission fraud and sales attribution manipulation. The scheme extended to creating false sales documentation and performance reports that would support manipulated commission calculations while concealing systematic theft of sales compensation that belonged to other team members based on actual sales performance and achievement. The employee had also been intercepting sales communications and performance reports to prevent discovery of commission manipulation while maintaining access to sales tracking systems for ongoing compensation fraud and performance attribution theft. The commission manipulation was discovered when other sales team members noticed discrepancies between their actual sales performance and commission compensation, leading to investigation of sales tracking and commission calculations that revealed systematic fraud designed to steal sales compensation through manipulated performance attribution and false commission calculations. Our 29th story comes from a business owner who discovered their co-owner had been forging partnership agreement modifications and legal document changes to increase their authority and profit sharing while reducing other partners' rights and financial entitlements. The co-owner had been given responsibility for certain legal matters and document management, providing opportunities to manipulate partnership agreements while maintaining the appearance of legitimate legal compliance and partnership administration that was part of normal business legal management. The partnership agreement forgery scheme involved sophisticated legal document manipulation and false authorization that would increase personal control and profit sharing while creating fraudulent legal justifications for reduced partnership rights and financial distributions for other business stakeholders. The co-owner had been particularly focused on modifying profit-sharing arrangements and management authority while creating false legal documentation that would support unauthorized changes to partnership structures and business control arrangements. The scheme extended to creating fake legal consultations and attorney communications that would support forged partnership modifications, while concealing the unauthorized nature of legal changes and partnership agreement manipulation that violated original partnership arrangements and legal agreements. The co-owner had also been intercepting legal correspondence and partnership communications to prevent discovery of forged agreements while maintaining access to legal documentation for ongoing partnership fraud and agreement manipulation. The partnership agreement forgery was discovered when other partners attempted to review legal documentation for business planning purposes and discovered unauthorized modifications that had never been discussed or approved, leading to legal investigation that revealed systematic forgery of partnership agreements and legal documentation designed to steal partnership control and profit sharing through fraudulent legal manipulation. Our 30th story involves a manager who was systematically stealing petty cash and small expense accounts while creating false documentation about operational costs and minor business expenses that supposedly justified missing funds and cash shortfalls. The manager had access to petty cash management and small expense oversight as part of normal operational responsibilities, providing opportunities to steal small amounts of money while creating false expense documentation and operational justifications that would conceal ongoing cash theft. The petty cash theft scheme involved systematic removal of small amounts of money while creating false expense reports and operational documentation that would explain missing cash through normal business operations and minor expense management that would be difficult to track without detailed financial analysis. The manager had been particularly careful to steal amounts that were small enough to avoid immediate detection while consistently accumulating substantial unauthorized income through systematic petty cash theft and minor expense manipulation over extended periods. The scheme extended to manipulating expense approval processes and cash management procedures to ensure that cash theft would remain hidden during routine financial monitoring and expense oversight that was designed to prevent unauthorized spending and cash management fraud. The manager had also been creating false operational justifications and business explanations for increased cash needs and expense requirements that would support ongoing cash theft while maintaining the appearance of legitimate expense management and operational cost oversight. The petty cash theft was discovered when business owners decided to audit minor expense accounts and discovered patterns of cash shortfalls that were inconsistent with reported operational expenses, leading to detailed cash management analysis that revealed systematic theft of petty cash and minor expense accounts through fraudulent documentation and expense manipulation. Our 31st story comes from a business owner who discovered their partner had been systematically redirecting company mail and important business correspondence to personal addresses while claiming that mail management was necessary for operational efficiency and communication coordination. The partner had been given responsibility for mail management and business correspondence oversight, providing opportunities to intercept important business communications while maintaining the appearance of legitimate mail management and communication coordination that was part of normal business operations. The mail redirection scheme involved systematic interception of important business correspondence and financial communications while creating false explanations for mail management changes and communication coordination that supposedly improved business efficiency and operational management. The partner had been particularly focused on intercepting financial correspondence and business opportunity communications that could be exploited for personal benefit, while maintaining enough normal mail delivery to avoid immediate detection of mail theft and correspondence interception. The scheme extended to manipulating business address records and communication systems to ensure that important correspondence would be redirected without detection while maintaining the appearance of normal mail management and business communication oversight. The partner had also been using intercepted mail and business correspondence to gather intelligence about business operations and opportunities while preventing other stakeholders from receiving important information that could affect business decision-making and strategic planning. The mail redirection operation was discovered when business owners failed to receive important financial correspondence and business communications, leading to investigation of mail management that revealed systematic interception and redirection of business correspondence for unauthorized intelligence gathering and personal benefit. Our 32nd story involves an employee who was systematically stealing company software licenses and digital assets for resale while maintaining normal IT responsibilities and software management duties that provided legitimate access to valuable digital resources and licensing agreements. The employee had administrative access to software licensing and digital asset management as part of IT responsibilities, providing opportunities to copy and resell valuable software licenses while creating false documentation about licensing needs and software usage that would conceal ongoing theft of digital assets. The software license theft scheme involved systematic copying and resale of expensive software licenses and digital tools while creating false usage reports and licensing documentation that would explain software allocation and license distribution, without revealing unauthorized copying and resale activities. The employee had been particularly focused on stealing the most expensive software licenses and specialized digital tools that would generate maximum resale value while maintaining enough legitimate software availability to avoid immediate detection of missing licenses and reduce software availability. The scheme extended to manipulating software usage tracking and license management to conceal theft while creating false justifications for increased software needs and licensing requirements that would support unauthorized license acquisition and digital asset accumulation. The employee had also been working with external buyers who would purchase stolen software licenses without verifying legitimate ownership or licensing authorization, creating a distribution network for stolen digital assets and software licensing fraud. The software license theft was discovered when the company experienced software licensing compliance issues and discovered that purchased licenses were missing from software management systems, leading to investigation of license tracking that revealed systematic theft and resale of valuable digital assets and software licensing agreements. Our 33rd story comes from a business owner who discovered their trusted bookkeeper had been manipulating tax filings and financial reporting to steal tax refunds and financial benefits while creating false tax documentation that concealed systematic theft of business tax benefits and government financial programs. The bookkeeper had exclusive access to tax preparation and government financial reporting, providing opportunities to manipulate tax filings while maintaining the appearance of legitimate tax compliance and financial reporting that was part of normal business accounting and tax management responsibilities. The tax filing manipulation scheme involved sophisticated alteration of tax calculations and financial reporting that would redirect tax refunds and government benefits to personal accounts while creating false tax documentation that would conceal ongoing theft of business tax benefits and financial advantages. The bookkeeper had been particularly focused on manipulating tax refunds and government financial programs that would generate maximum personal financial benefit while maintaining enough legitimate tax compliance to avoid government auditing and tax enforcement that might expose systematic tax fraud and financial manipulation. The scheme extended to creating false business expense documentation and tax deduction claims that would support manipulated tax filings while concealing personal benefit from business tax advantages and government financial programs that were intended for legitimate business operations. The bookkeeper had also been intercepting tax correspondence and government communications to prevent discovery of tax manipulation while maintaining access to tax preparation systems for ongoing financial fraud and tax benefit theft. The tax filing manipulation was discovered when business owners received unexpected tax audit notices and government inquiries about financial reporting discrepancies, leading to investigation of tax filings that revealed systematic manipulation designed to steal business tax benefits and government financial program advantages. Our 34th story involves a manager who was systematically stealing company insurance claim payments and settlement funds while creating false documentation about insurance claims and damage assessments that supposedly justified missing insurance proceeds and claim payments. The manager had responsibility for insurance claim management and settlement coordination as part of risk management duties, providing opportunities to intercept insurance payments while maintaining the appearance of legitimate insurance claim processing and settlement management that was part of normal business operations. The insurance claim theft scheme involved systematic interception of insurance payments and settlement funds while creating false documentation about claim processing and damage assessment that would explain missing insurance proceeds through normal claim management and settlement coordination activities. The manager had been particularly focused on intercepting large insurance settlements and claim payments that would generate substantial unauthorized income while maintaining enough legitimate claim processing to avoid immediate detection of missing insurance proceeds and settlement fund theft. The scheme extended to manipulating insurance claim documentation and settlement records to conceal theft while creating false explanations for reduced insurance proceeds and claim settlement amounts that were actually being stolen rather than legitimately processed for business benefit. The manager had also been working with corrupt insurance adjusters and claim processors who would facilitate insurance fraud and settlement manipulation in exchange for shared proceeds from stolen insurance payments and fraudulent claim processing. The insurance claim theft was discovered when business owners noticed that insurance settlements seemed smaller than expected for covered damages, leading to investigation of insurance claim processing that revealed systematic theft of insurance proceeds and settlement funds through fraudulent claim management and settlement manipulation. Our final story comes from a business owner who discovered their partner had been systematically selling proprietary customer data and confidential business information to competitors and data brokers while maintaining normal business operations and customer relationship management responsibilities. The partner had access to comprehensive customer databases and confidential business information as part of customer relationship management and business development duties, providing opportunities to monetize valuable business data while maintaining the appearance of legitimate customer service and business information management. The customer data sale scheme involved systematic compilation and sale of proprietary customer information and business intelligence to competitors and data brokers who were willing to pay premium prices for confidential business data and customer relationship information that would provide competitive advantages and marketing opportunities. The partner had been particularly focused on selling the most valuable customer data and business intelligence that would generate maximum personal profit while maintaining enough customer relationship management to avoid immediate detection of data theft and information security breaches that violated customer privacy and business confidentiality. The scheme extended to creating comprehensive customer profiles and business intelligence packages that would provide maximum value to competitors while concealing ongoing data theft through normal customer relationship management and business information processing activities. The partner had also been recruiting other employees who had access to different types of customer information and business data, creating a network of information theft that could provide comprehensive intelligence about customer relationships and business operations to competing companies and data brokers. The customer data sale operation was discovered when competitors began demonstrating detailed knowledge of proprietary customer information and business relationships that could only have been obtained through insider access to confidential business databases and customer relationship management systems, leading to investigation that revealed systematic theft and sale of valuable business data and customer information. That concludes tonight's collection of 35 stories about small business betrayals that destroyed dreams and devastated families who trusted the wrong people with their life's work. These situations remind us that building a successful business requires not only hard work and dedication, but also careful attention to who we trust with our most valuable assets and sensitive information. Sweet dreams, and I'll see you tomorrow night with more fascinating tales from Reddit.